everybody, welcome to the Closing Beat. Happy Tuesday. How you doing today? This is a quick stock market update show that we do to cover the stock market, all the good stuff that's happened throughout the day. We'll go over all of that, and we're actually going over a lot of research and data and stuff because we've got a new site that we're going to be releasing soon. If you want to check it out, you could just go check that out on our website there. It's jazzwealth.com/research. If you take a look over here, this is what it is. Give you a brief rundown of everything that is to be included. If you like learning, you like the data, you like kind of keeping up with that stuff, you can actually go to the bottom, put your email in here, and we'll let you know when the site goes public. Should be about a week or two from now. We won't email or spam or anything else along the way, but I hope you'll check that out. jazzwealth.com/research is the place, and I'll cover some of the research that will be included in that class or in that membership site today. We'll go over that along the way so you kind of know what to expect. Take a look at the stock market today. We had a little bit of a pop. We've got a lot of interesting data to share with you, but basically a lot of the excitement came from retail sales, up 17.7%. All you need to know is it was double what was expected, so really exciting there. If you zoom in onto the retail sales numbers, there's a lot of different categories. There's been times that I've shared every category with you just to go over it. I'll briefly just share some of the highlights here. Clothing. Strongest number ever, up 188% month over month, right? So from the virus issue till now. So that's a good sign. Furniture, sporting goods, electronics and appliances, auto parts, bars and restaurants, all better than ever. There's never been a report better than what they did month over month, meaning there's never been a change to the positive from being so down month over month. Retail sales as a whole at 7.7%. That's the best number ever. Never seen that. If you look at gas stations, that's the best number ever. Building materials, best ever. Only general merchandise and online sales were not the best. They were the second and third best, respectively. So it was a really good start as far as the markets go. We gapped up over 2%, really, really strong there. And some of the big leaders today, we're going to be retail driven, right? Naturally, just because of the numbers there. So take a look at a few of the things here. I'll just go through some of these stocks that were leaders in the S&P. You got Nordstrom today, higher by 13%. Kohl's higher by 9% on the day, and Gap was one of the leaders with an 8.5% gain on the day. So let's take a look at the indices really quick, and I'll go from there. You've got the S&P today back comfortably above the 200-day moving average. You don't like how it didn't close at highs. There was a lot of effort to try to push it off the highs today, as indicated by that tail left there. If you're not familiar with candlesticks, which is what you're looking at on the chart, and you're one of our customers, go into the dojo. We'll probably include this in the membership site as well. We did 3 different classes on the types of candlesticks, really the language that they're telling you, not an opinion-based class, but a fact-based class for you, so you can check that out. I believe the Russell 2000, was your best performing index of the day. It could not get over the 200-day moving average. So again, you didn't like to see. We started off strong, started momentum, and then it just faded throughout the day, finishing about the halfway point. It leaves you in a position where you go, I need more information. I didn't see anything really, really strong today. If you look at the NASDAQ, that was the strongest area of the market today. And the Dow, the weakest area, but it was still strong overall. And the Dow as well. I'll cover the NASDAQ here. It's all going to be FANG-related names. So your Facebook did well today, up 1.3%. Apple almost hitting new 52-week highs. The rest of them all did really well. The Russell with the strongest index out of the group, as I mentioned, up over 15% over the last month there. Still down 13.2% on the year. It was a broad rally in the Russell. Biotech and banks were the ones that were going to lead the way. So financials, if you're taking a look at that. Here's the thing. If you look at the stock market in general, we had an interesting day yesterday. Anytime there's an interesting day, what we do is like to run a study. We just like to check some things out. Yesterday, what happened is we gapped down by over 2%, sold off a little bit, and then we bounced over 3% from the lows. So what we did is we just said, okay, how many times has that happened? How many times have we gapped down 2%, sold off, then recovered all of it, plus at least 1% or more, to have a 3% rally at some point throughout the day? In other words, a large, wide-range day that started rather negatively. So we're actually going to share that data with you because there's not a lot of times that this has happened, but it's actually kind of a unique thing here. So I'll go over to the charts. We'll take a look. What we're looking for is what I just mentioned, a 2% gap down with a 3% bounce off of lows or more. And I highlighted a couple different things here. So you see red dots and green dots. There are 2 times that this has happened, October 28th, 1997, and May 25th, 2010, where we weren't near a top or a bottom. See, what we had yesterday typically happens near the tops or bottoms of markets. And to prove it to you, we share the data. Here's 2 times that it happened over here. It actually has only happened 10 times in total since SPY started trading. SPY started trading in 1993. So you got 2 times here, right near the bottoms of the market after a nice little pullback, a good pullback. You got right before the 2008 crash there. You got 1 time that it happened. You have 5 different times that it happened here. And of course, it happened just most recently. So the moral of the story here is this happens near market tops or bottoms, which you could argue we're near a top at the moment, but you could also say we're in the middle of a bigger expansion, right? So that's where this happened the last 2 times, where it was not near a top or a bottom. In other words, what I'm trying to say is this could either be the top of a market, because we're not near a bottom at the moment, and that would be totally normal for this sort of event to happen there, or this could be part of a bigger expansion. We're going to find out and see what happens there, but I like sharing that kind of data with you, so I hope that you found that interesting overall. Very rare that happens, only happened 10 times overall in the stock market there, so take with it what you will. Anyways, let's go back over here real quick. So on our FinTips videos this week, if you're interested, by the way, yesterday we did how to improve your dividend investing, focused on volatility. I'm going to keep expanding on that. You seem to be interested in that. Tomorrow we're going to ask a question. Should you avoid international funds in your 401k, or like the Dave Ramsey mix where he says avoid, or the 4 different funds, international growth being one of them there. And then on Friday, we're going to talk about a new 401k rollover strategy given the CARES Act. If you find yourself unemployed, we're going to go through a couple scenarios there to help you guys out as well. Our Wine and Wealth this week, we're going to study all of the pullbacks in all bull markets, right? So what we're going to look at is in a bull market, how often do we pull back? What sort of things happen? We're going to analyze every one of them and actually go through and show you what happens. Just to give you an idea, we're in the middle of a bull market right now, and if we do pull back, is it the end of the world, right? It's going to be painted as the end of the world, but we're going to cover that for our customers on Thursday night this week. So let's go over to the sector breakdown here and take a look at some of the things that we've got going on. Communication services. Oh, nope, that's not it. Communication services. There you go. Added about 1% on the day. Believe it or not, this was at near the bottom of the performers in overall sectors. You got some interesting names that stick out, like T-Mobile down 1.7%. SoftBank, a very popular and very large fund out there, says they're looking to sell about 2/3 of their position as early as next week, so that weighted on them just a little bit. Electronic Arts just pulling back from 52-week highs a little bit. They did hit new 52-week highs today. And Viacom also kind of dragged down the communication services overall, but not a bad day. Can't argue with it. Just it wasn't as strong as the rest of them. Industrials quite strong today. Every stock in the sector was positive if you were looking through it there. Boeing was the biggest contributor with a gain of 3.5%. I know a lot of you are looking for that. There was some negative news there. Over in the EU, they were talking about delaying the 737 MAX return. That hit them a little bit, but not too bad. You look at things like United Airlines up 3%. They're going to require that you wear masks on all flights there. Not all airlines were higher on the day, though. Southwest Airlines did manage to get back to positive, and you had Spirit Airlines was one of the leaders if you're looking for the strength out of the group today, just kind of carrying over momentum from yesterday overall. Now, in the industrials, the infrastructure bill that's being kind of proposed at the White House there, about $1 trillion, looking pretty interesting there. By the way, on that infrastructure bill, so the White House proposing a $1 trillion infrastructure bill to kind of kickstart things, and I believe they've already proposed it. What we did, you got to go to our Twitter. Go over to our Twitter account. We posted the top infrastructure stocks. So if this thing starts to make headlines and you're looking for, well, I don't know infrastructure stocks. I know some of the obvious ones, but what are some of the other ones that analysts like, in particular? Why? Posted a nice strong list. I think there was 22 names in the list there with strong analyst ratings. We put the price in there, dividend and everything as well. While you're over there checking that out on Twitter, maybe you'll hit us a follow real quick. We appreciate that. But just posting that there for you to check out if you want to do a little research, if that sort of thing, if you find that interesting. Anyways, let's go to the industrials here. Some of the obvious ones, you got Caterpillar above the 200-day moving average today, up 5.25% overall in that category. And John Deere, another one. It did not close above the 200-day, had a strong day, piercing through it. Not too bad there. If you look at healthcare, which we're going to cover in a little more detail for you, 2.46% gain on the day. Eli Lilly was the biggest contributor. And we'll cover in a second, Eli Lilly had its best day in over 11 years with a 15.68% return. Looking pretty good there. The previous record was 14.35%. I guess I'm covering it now. On October 13th, 2008. So looking pretty good. Eli Lilly with a cancer drug helping them out today. Johnson & Johnson, also a bigger mover today, 2.25%, and you got Merck higher by 4% on the day. We talked about these yesterday as being overextended. The bulls started sort of coming in there saying, all right, enough's enough, wanting to buy the dip. I'm going to go through an example of how you could look through these stocks if you're interested in just a second. We'll go over to tech as our last one here. Strong day, 2% higher on the day. It's going to be a lot because of Apple up 2.6%, and Microsoft did well, also about the same exact gain on the day. They make up about 40%. Apple says, Apple says that the App Store has officially transacted $519 billion in 2019. Wow, that's a lot of money. You got Autodesk higher by 5.2% there, continuing its momentum. It's now up over 50% in the last 3 months. If you look at any time period, the last year, the last 6 months, the last 3 months, the last 1 month, the last week, whatever, any time within that last year, look at the performance relative to the stock market. It has beat it on every single one of those time periods there. Looking good, nice and strong. You got gold just a touch higher today, added $9.3 up to $1736.50 an ounce, and tightening up. That's the key word here that I've been talking about. Tightening up inside of this range. It got up to highs, it pulled back as it always does when it gets extended from the 20-day and the 50-day. It's now been trending sideways, really setting up kind of like a bullish pattern there for you momentum uptrend type traders that like that sort of thing. Crude oil slightly higher on the day, $1.20 up to $38.56 a barrel. The IEA sees a record rebound in oil prices in 2021. That helped to give it a little bounce off the 20-day moving average. And that's pretty much all I have for you there. We'll go over to the technical breakdown here to give you some analysis on that. You got 7 new highs on the day. New 52-week highs, in the S&P 500. Adobe being one of them, 2.5% higher on the day. Electronic Arts, although it did pull back a little bit. A couple new names in here. Clack hasn't been to 52-week highs in at least a week or so. So that one was higher by 2.7. That's a semiconductor stock. So you got a great, 4 or 5 different sectors so far that we've talked about. And we already mentioned Autodesk, nice and strong. That was one. Eli Lilly, as I mentioned, had its best day in over 11 years. And I did already cover all of that. So jump just a little bit ahead for you. There were 0 stocks that hit new 52-week lows today. That's going on over 5 weeks there, looking strong. And what I want to do is highlight some of the healthcare stocks, because a lot of people ask me this. Okay, Dustin, I see healthcare's pulled back. I'd like to do my own kind of analysis here and come to my own conclusions. How can I start? Yesterday I mentioned Cigna down 13%, Merck and United Healthcare down 10%, all in the last week, right? The good little pullbacks there. Bristol Myers down as well. Kind of hinting at, hey, there's an opportunity here. Maybe people are looking to buy this dip. So let's talk about it. Eventually, you come to a conclusion of either the stocks or the sector that you want to buy. But if I were to just kind of like go from scratch, let's just pretend you have no idea. You want to know where to start. So first thing you recognize is healthcare's had a discount. It's the light blue line in there. Healthcare had a strong run here, obviously, and it didn't pull back. Right? Whereas some of the other sectors pulled back, you could see it just went sideways in there. So it went quiet. We've talked about it a lot here on the closing beat. And in fact, since the March 23rd lows, healthcare beat every index besides the NASDAQ in terms of performance. So you recognize that as something that led the way as the markets bounced out of that virus low there. So already you say, well, that's a strong area. It's just not in favor right now. And maybe this pullback makes it more in favor. The pullback was last week, 7%, all in 1 week, went from being up 1% to down basically 6%. That's how you get 7%. And so had a significant pullback. Now, we know that about the sector. Now, what do? You say, well, I'm interested in stocks in that sector. I like buying pullbacks or whatever your deal is. You look at that. There's a couple things you could do. You could look at an ETF. This is the easiest way to do it. Search for the ETF. Look for the top 25 holdings. Chances are, if you look at the top 25 holdings and sort them by weight, as I've done for you here, then you're going to find names you recognize. We know Johnson & Johnson. You know United Healthcare. You probably know Merck and Pfizer. You're going to recognize names in here that you go, okay, I'm comfortable with that. I buy stuff from CVS. At least it's a name I know of. Eli Lilly. I get it. I get what they do. And you might do that. Down here at the bottom, what I did is, I'll just make this bigger. What I did at the bottom here, and let's delete that guy. We sorted by weight. So you can either look at it on a spreadsheet, or you could say, here's the stock's performance going up and the weighting of the stock on the index, on the ETF. Johnson & Johnson holding the biggest weight in that ETF. I like to look at it this way. And then we sorted by performance here. So you can see some of these like Merck and Pfizer, they had pulled back more. CVS and Cigna pulled back more. Dexcom leading the way, but not a big weighting overall. So if I go back here, you see you're just looking at the same thing, right? It's just the same thing plotted in a different way. Okay, anyways, so that might give you some ideas of stocks you want to look at. Now, for me, I don't like the biotech stocks so much. So what I would do is take it a step further and say, show me the industries that they're in. I want to eliminate some of those smaller, more wild biotech stocks. And by sorting by industry, I can look real quickly and see Regeneron Pharmaceuticals is coming off the list. I'm not interested in that one. I just don't like biotech myself. You may have a price requirement. You may say it's got to be under $50, or a volume requirement, or a volatility requirement. And in any case, now you can take that list and start to sort it in any way that makes you feel more comfortable with generating 5 or 6 ideas, right? Well, what I did is I said, I just want the bigger names, right? All I'm interested in is the names that I know, the bigger names here. So I'm going to go with Johnson & Johnson, United, Merck, Pfizer, AbbVie, and Abbott Labs here. Now, from there, what you can do is say, I've got a list. I don't care about the rest of them right now. Let me just analyze these and see if there's a stock in particular that I like. The next thing you can do is say, well, show me the ones that fell the most and fell the least, right? So you could plot them all on a chart. You could use any charting package to do that. It's nothing fancy that I'm sharing with you here. And you could say, well, either I'm one that likes to buy what appears to be relatively strong, meaning it didn't fall as much as the ETF or the sector, or you're someone that says, I like the discount. I want to see the ones that really fell. They're not going to zero. I want to buy the deepest discount I can. So what we did is plotted them over the last 5 days. So again, the light blue line that you see is healthcare. That's the XLV, fell about 6% as of when I got this here. So that's what you have. Looking up, you see that AbbVie, Abbott, and Johnson & Johnson are more, they're relatively strong compared to the healthcare sector. They didn't fall as much. You've got United Healthcare and Pfizer falling more than the sector. So right there, you can now start to say, you know what? I want the strongest of the strongest, provided that everything else checks out for you and you're happy with it. AbbVie and Abbott are your top 2. On the downside there, if you say you like the discounts or you want to add to something that's discount or start a position in something that's fallen a little bit more than the rest, Pfizer and United Healthcare. So just kind of a quick way, really quick way to take a look at all the different ways that you can kind of participate in a recognition of a sector that you want to do. It's called top-down analysis. You look at the stock market and you say, if it falls, I want to buy it. Now, what sector? If a certain sector falls by more or by less, I want to buy it. But do I want to buy the sector? No, I want to buy individual stocks. Okay, which stocks do I want to buy? And you can kind of hone it in that way. Otherwise, you end up just kind of going all over the place. It can be a little stressful trying to find a bunch of positions. So there's a strategy for you to just go top down and see if you're interested in that. Let me know what you thought about that. That took quite a bit to put together. It always feels like I just rattle this stuff off and then it's no longer good anymore. But that's the type of stuff that we're going to include in our research site, jazzwealth.com/research. If you want to leave your email, we'll let you know when it's up and running. And I just want to share that with you. So hopefully you found that interesting. We'll take it from here and go on to some stocks in the news. Chesapeake. You got Chesapeake Energy. Oh, no, that's going to be Chesapeake. There you go. Remember when this thing spiked the other day and I was giving everybody a hard time for buying it? They're going to file bankruptcy, so hope you don't own it. FedEx, they kept their dividend at 65 cents. So they didn't raise it. They didn't lower it. They just kept it the same. You've got Nikola. Yeah, you guys know what this is. Recent IPO here that they make the electric/hydrogen trucks and semi-trucks, things like that. Down 7% on the day. They're going to offer another 53 million shares. There's a lot of this going on right now, by the way, and it's all on the stocks that everybody's excited about. NIO is another one, 2.3% higher today. They're going to issue 72 million more shares at $5.95. Now, you know how I feel about NIO, right? We've talked about this before, and this is not the way you would analyze this, but just for fun, I looked it up. They issue those 72 million shares, they're going to have about 1.1 billion shares outstanding. Does that sound like a lot? I didn't know if that sounded like a lot. So we looked up Apple. Apple's got 4.36 billion. Do you think NIO should have that many shares given where they stand as a company that doesn't make a profit? Amazon has 500 million shares outstanding. Netflix, 439 million. I put that one in there because they're known for raising money. They go the debt route, though. Tesla, 183 million shares, and yet NIO is going to have 1.1 billion shares open to the public there. They are diluting you. Just a heads up there. Kind of like Hertz. Little heads up there. All right, let's go over a couple other things here. Lennar beat on earnings. I believe shares were lower. McDonald's saw store sales decline 5.1% over April. Yeah, that's what it is. You got JKS Solar reporting earnings tomorrow, And if you're interested, or if you happen to have the stock Grief Inc., it's not like a sad company. They make packaging products. Paying out 44 cents in dividends, and Wingstop 11 cents in dividends. And I think I'll wrap it up there. Hope to go live again starting Monday next week, so we can answer questions and stuff, do all that thing, the good stuff that you guys like to have there. And well, that's pretty much all I have for you. So hope you enjoyed. If you did, maybe you'll hit the subscribe button and help us out there. Check us out at jazzwealth.com. And if you're interested in the research site, just go to jazzwealth.com/research. We won't spam you or do anything. We'll send you one email that says when it's available, and then we'll leave you alone. So have a great rest of your day, and we'll see you soon. Enjoy.